Hi everyone, Ali here again. Just wanted to do a quick video update for March 20th, 2020. But before we get into it, I just wanted to show you a clip from a movie, and I'm just trying to build your mindset. So let's just watch this quickly, and then we'll continue our chat.
The Mustang. How long has it been tied?
3 days, sir.
Good. Fetch my crop and spurs. Break easy or you will break hard, Mustang. Back up, back up, back up. Come on, Mustang. You see, gentlemen, any horse can be broken. Move along, Mustang. There are those in Washington who believe the West will never be settled. The Northern Pacific Railroad will never breach Nebraska. A hostile Lakota will never submit to Providence. And it is that manner of small thinking that would say this horse could never be broken. Discipline, time, and patience are the three great levelers.
Okay, so just wanted you guys to look at this video clip, and I wanted to think of the horse as you're investing, right? And you're on top of that horse. And the only way you're going to win from that horse and you'd be able to tame it is when you have discipline, time, and patience. So if you're not going to use discipline, time, or patience, the stock prices and the trading is going to get the better of you. And unfortunately, you'll probably get the beating that you saw that the guy was getting. And in the end, the horse is going to win. So you want it to be the other way around. So let's get back into the presentation. So again, here is the 12-year chart for NASDAQ 100. It's been trending higher. We've seen this before in my previous videos. Here's the chart of S&P 500. This hasn't broken off like NASDAQ has and gone into a different trajectory. It's been on this 12-year trend line. We've broken the 12-year trend line, and now we are testing the 2018 low. And this is on NASDAQ. This is the most recent activity. This is how we dropped in February. We've been going lower. Here's a 10-day moving average, which is a downward sloping moving average. And I've been building this box around the most recent activity. And I've been saying that, okay, in order for us to take a direction, this moving average will come down over time. And we need to break out of this box upwards in order for the market to go higher. But we haven't seen that yet. This is the longest candle, and this was a really good day, but we couldn't break this candle higher. This was a very volatile day, and we ended higher than the low of this candle, and this was as you can see that with the wicks, you can see that it's almost the same size as this candle. But on Friday, unlike other Fridays that we've seen so far, we had a really bad ending, right? It was very sharp sell-off in that day. So we still haven't seen that confirmation of it going higher. S&P 500 shows even a worse picture. We've been dropping all along, and I've been building this box. Same thing, moving average still sloping downwards. But this was the trading. Here's the like somewhere this is just a box, right? It's there's no line, there's no hard and fast rule. I'm just trying to box out most of the activity, and this is the low, this is the high, and then we've remained within that. But even on this day where we had a really long wick, but we saw that the market recovered and we closed within this range. But this Friday was the first day when we broke this box on S&P 500. The good thing is we are still within the wick of this candle right here, but we've broken 2018 low on S&P 500. So let's see what happens on Monday. Still not looking good. Rather than formulating opinions and buying based on opinions, the reason for me to show you that clip is to have discipline, time, and patience. So as I've said it in my previous videos, I have done some buying somewhere around here, right? And that was where irrational exuberance got the better of me, and I was thinking that okay, the market's doing so well, it's going to just continue going higher, and I should be buying the dips. But this is not normal times, and these are not dips. To me, these are bear market rallies, right? So we've been seeing Fridays as really good days, and this was the first Friday this week on the 19th that we had, or sorry, the 20th that we had this sharp sell-off. So quickly, just looking at volatility. Volatility did pull back a little bit, but by no means that means we're out of the woods. Uh, Volatility going down doesn't mean that the market's going to go up. And just to show you over here, this is 2008. This is right now. We still haven't reached the 2008 level in volatility spikes. Just so that people who don't understand what volatility is just volatility is when think of it like a hurricane, right? We don't get hurricanes all the time, right? We generally have, ideally we'd want more sunny days. Sometimes we have rain, but we seldomly have hurricanes. So think of it as a hurricane, right? And are you going to invest in hurricanes thinking that we'll have hurricanes every single day? No. You're probably going to invest in a hurricane when you think that, okay, there is a forecast of a hurricane, let me invest in a hurricane. So if whoever's trading VIX should keep that in mind, that you should only be trading it or maybe to hedge your portfolio, but don't be investing in it. Okay, so and my other point that VIX could be dropping, as you can see over here. Market bottomed out somewhere around here in March of March, or like somewhere like first or second quarter of 2009, and all along VIX had been dropping. So by no means it means that VIX is going to come down and the market's going to start going higher. And that wraps up for the weekend update. I wish you guys all the best and be safe out there. Thanks. Bye.